Tom, you got anything to add to that? Like I try to make the call. Obviously, the call is dynamic in that I'm reading and reacting to what I'm hearing you say, and I don't know what you're going to talk about. But I try to, you guys are giving the fundamental updates where you think things can go from here or there. You talk quite a bit about your process, but I'm trying to like reinforce like core principles, like the pods, and valuation isn't a catalyst. Any thoughts on that?
There's two aspects of the valuation exercise. One is what's my nearest neighbor? What can I justify? Um, I got to con my PM to putting in the book so I can get paid, right? Like I have to tell a story. And
Con my
it's absolutely 100% a long con, right? And you are essentially telling a story with data. It makes it very convincing. But it's all about your next idea, right? So like I said in the early look the other day, the analyst dilemma is really, if I oversold something to John Dawson, he would pat me on the head when I told him, hey, we got to get out of this thing. Things changed. Pat me on the head. Oh, Tom, look at the chart. Look at that. This thing's breaking out, or this is just gonna, like, it would just be, I would get spoken to like I didn't actually know what I was doing. And other times, some short would be up in my face and I got all caps, the all caps I am from Russell. Like, why does this stock go up every day? I had, Empath was a company I was short. And I was like, short more, like literally short more, mother. Like this, I need to get paid. And you have 25 basis points in the book, right? Like that was, and those are the moments that define you, right? Like that's when you sort out what you know and what you don't. And valuation is basically an argument. It's the last argument. And you're like, I mean, Jay will say this, that things look really expensive at the bottom. That's probably true, but it's all about slope of the line, and which feeds right into, if I look at, and the way I've solved for this again, is like, how do I build conviction around what I'm doing? My group, I mean, I know it's relative outperformer in quad 3, but I'm going to suffer like crazy pain for, if I hold on to my fundamental case too tightly. I'm just going to be wrong, and I'm going to look like an idiot, and I'm going to feel badly about myself, right? So the way you fix that is you look at the slope of the estimate trend. So I have this great, sort of wisdom of crowds machine, which is the consensus estimate. You measure the slope of the line every day, and you standardize it, and you average it across a couple hundred companies. And it turns out, lo and behold, that when the slope of the line is down and to the right, stocks go down. Boy, that makes sense because multiples sort of define the growth rate. Slope of the line down, lower growth rate, lower multiple. Also a lower number in the future, right? So lower than expected. So I've got two things working against me with slope of the line moving down and to the right. You can look in my position monitor note every weekend and see the update there. So the probability that I'm going to be right any given week is now much lower because it's quad 3 and the slope of the line in my group is down and to the right. The JOLTS number yesterday, again, like the healthcare macro, okay, what's the next step? Healthcare macro next step is the job openings number was terrible. Actually, one of the worst reflections of healthcare labor demand that I have in this chart. And I'm looking at this chart, I'm wishing that it doesn't make it so. I wish it would look differently. I have had a pent-up demand thesis that should be driving incremental labor demand, more patients in the building, more throughput, et cetera. It doesn't look like it's happening. I'll get the ADP number this morning for healthcare. That'll tell me that's already been slowing for the last couple of weeks. Okay, so now I've got slope of the line is slowing. I'm in quad 3. This healthcare macro data point is negative. What's next? Well, I already told you that HCA, is going to have an inline quarter for same store adjusted admissions. Pricing is probably booked in. I'm scrubbing that. So the next number I need to do is I need to build a forecast model for same store adjusted admission off the healthcare macro data from any other thing that I can grab to build a conviction and tell you a really convincing story about. But really, the precondition is quad 3, slope of the line, healthcare macro. The fundamental piece, guess what? HCA is a very good operator, but they are held captive by the environment that they live in. So there's really not much they can do other than wait for somebody to walk through the door, right? That's consumption of healthcare is very passive that way. And so where I am right now, I'm looking for reasons to dump longs, and I'm looking for reasons to add shorts. Probably going to look more right. The more right I am, the more likely you are to be convinced that I've got the next idea right. Right. That's really the treadmill we're on. So, in as much as I'm building conviction around my next idea.
Yeah, really good answer on the whole process. And the one sentence that should be the go-to sentence for all of you, back to whether you're pitching your boss a stock or you're trying to be a better boss and perform better and understand how stocks move. Tom said the multiple reflects the growth rate. Put more specifically, the multiple reflects the rate of change of the growth rate. If the rate of change of the growth rate is accelerating, going up instead of going down, like Tom's saying, then you get multiple expansion. So again and again and again, it's beyond, God couldn't predict what a multiple should or could be. People just talk about it because it gets them into that realm of certainty. How certain are you? When you watch Billions, so again, that part of Wall Street died a long time ago on the alpha tree. Okay. So again, there's a better way to do it. Tom's doing it much better than most. We have some early adopters on how he's doing this. One would be me. And my batting averages reflect that in healthcare names, long and short.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.